Good morning. Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from the Nasdaq PHLX options trading floor. Joining me for this segment, we have George Zaki, he's a financial advisor with Guggenheimer, Zaki Financial Advisory Team at Janney, Montgomery, Scott. This is why I carry notes around for titles such as yours. But thank you so much for joining us.
Thank you.
On the PHLX trading floor, we're talking about NextGen financial planning here and thinking about flexibility in the face of unexpected life changes or inertia events, as you say.
That's right. We all fall victim to inertia, and so it's important to have a plan in place before that happens. I would say that my wife and I recently had our first baby.
Oh, fun.
Thank you. He's a year old, and making sure that we had the right plan in place before he came into our lives was important. We have a college savings plan in place. Do we have a will? All the things that come into play when you're putting together the right estate plan is important. So that's why flexibility is important.
Well, and I think it's important to do too, mentioning planning in advance, because life happens. And
right.
It's not the easiest conversation to have when you're talking about planning a will and so forth, but it's so key because you can't think about it when these events happen.
That's right. And so I mentioned flexibility because if you have the right financial advisor, the right advisory team in place ahead of time, you can be prepared for all of these events. We work with our clients through our planning department to make sure that we have an estate plan, a financial plan in place. We work with attorneys or accountants, whatever's necessary to get the couple or the investor in a good position.
Let's talk about NextGen financial planning and how it's different from traditional financial planning.
So with NextGen, it's an interesting take. You're dealing with, if we call the parents, the baby boomer generation, and then we have the millennial generation, in this instance considered the NextGen. And there's going to be a massive wealth transfer from the baby boomer generation to the millennial generation. So we work with the baby boomer generation to make sure that the estate plan is in place. So that way when they do pass, or when they do pass the wealth on to their heirs, that's done smoothly. And one of the biggest gifts that you can do for your kids is to make sure that transition is done as smooth as possible. So we work with them to make sure that the estate plan is up to snuff. We work with the next generation to educate and to make sure that they understand the responsibility that they're about to inherit. It's not an easy task. It can be overwhelming, but the third point I'd like to make in that regard is to make sure that your financial advisory team is multi-generational. Ours is multi-generational. We have a senior partner, we have a junior partner, and we're constantly bringing on new members to make sure that we're connecting with every facet of the family, modern family.
Great point. So let's talk about the markets a little bit. In 2018, certainly a very different feel than 2017. How are your clients adjusting to that? How are they managing their risk appetite?
So volatility came back very ferociously in 2018, especially in the latter half of the year. We saw it a bit in the beginning part of the year. I would say that volatility is normal. And for the last couple of years, we had an absence of volatility, and that's abnormal. There's an interesting stat. Since 1980, the S&P 500 has returned on average about 10% per year. And intra-year, in every year, on average, we've seen a 14% drop from peak to trough. So that shows that there is volatility while the market continues to earn new highs and good returns for investors. So staying the course is important, making sure that you're reviewing your asset allocation and making sure that you can stomach the right amount of risk in your portfolio.
Right. It's what markets do. They're supposed to go up and down. That's how you have averages. That's how you find good points to sell, good points to enter, and to remain invested for the long term. So
right.
I agree with you there. Now, your 2019 outlook, do you expect us to continue to be in this more volatile environment than we're used to?
We do see volatility continuing to 2019. That being said, we do not see a recession as an immediate cause for concern. And we don't think that you need to have an overly cautious stance on risk assets. We do think that corporate earnings will continue to grow, albeit at a slower pace from 2018. That being said, it's important in 2019 to have flexibility, to go back to my first point, with your investments, making sure that you're in the right type of investments. Do you own the right type of sectors? Do you own the right types of bonds? Of course, you have to make sure that you're checking with your advisor and making sure that these types of things are right for you as an investor. I wouldn't recommend just taking it as a
blanket recommendation.
Yep.
Always consult with your advisor. And to wrap up here, let's talk about the evolution of the advisory business. You touched upon it before in terms of transferring assets, but what have you seen in your career and how financial planning service has evolved?
So I'm glad you asked that. One of the largest changes I've seen in my career has been the evolution of the do-it-yourself platform. Right? We saw this. My wife loves to watch the Food Network or any of these
house flipping shows.
shows. And so all of this do-it-yourself instructional video that's available online has moved into my industry. And so we have robo-advisors online, and while I do think that they do serve a purpose and they will fill a need for many investors, whether you're a beginning investor, whether you're a smaller investor just starting out, who might be very cost conscious, that's great. But I think for a modern family's complexities and their needs for their financial plan, I don't think that they'll be able to fill that void. I think it's important to have a financial advisor. That human touch, that high touch element is really important. And you know, I would compare today's robo-advisor platform to that of what we saw during the dot-com boom in the early 2000s with the online educational platform. Mm-hmm. It filled a great void and helped a lot of people get degrees and earn a lot of education that was needed, but it wasn't for everyone. And so the robo-advisor will be there for many, but I think at the end of the day, financial advisory with human beings wins out.
Right. Speaking for myself, in an environment such as this, I'd want someone to talk to and be on the other end of the phone. When you're doing complex estate planning, or if you don't know what to do with this piece of paperwork, or you have an unexpected life event, a robot's not going to answer that for you.
That's right.
So I think I certainly agree with you.
The robot won't know your name and won't be able to remember your long title.
Yeah, exactly. That's why we still carry notes around paper, right? Thank you so much for joining us on the PHLX trading floor. And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter.